The tax clock is ticking. And while you definitely want to file before next month's deadline of April 18th, you don't want to miss any deductions that you deserve. Jessica Lynn is here with areas you need to be aware of, especially if you're an older adult. Jessica is an enrolled agent tax manager at NMS Incorporated. Why did you pick that name? The first area that we want to focus on is medical expenses. But didn't they just raise the limit a couple years ago?
They did for taxpayers under the age of 65. Previously, if your medical expenses added up to over 7.5% of your adjusted gross income, you could deduct them, but they raised that to 10%. However, if you're over the age of 65, it still remains at the 7.5%.
Oh, that's a good thing. So what are considered medical deductions then?
You can deduct insurance, co-pays, prescriptions, mileage, supplies. There's really a lot of things in that category.
Okay, anything medical, anything you use. So how about another deduction that's often missed?
A lot of times we see people miss or they're just not aware of, if you actually do an addition to your home to make it handicap accessible, you are allowed to deduct that expense as long as it increases the value of your home over the cost of the addition.
Okay, yeah, probably people wouldn't think about that. Also, there's a lot of adult children who are viewers that financially support their parents. Is there any kind of deduction for that?
Yes, Generally, to claim a dependent, they have to live with you. However, in cases where you're caring for a parent and they may live outside of your home, you are still able to claim them even if they're not in the home, as long as they meet two other tests, which are that their gross income is under $4,050, in which case Social Security doesn't usually count for that.
Oh, okay.
And
that's good, because otherwise I think most people would be over that.
Yes, and then the second test is that you have to also provide more than half of their support.
Okay, so if they're living with you, it can be a dependent. If you're helping just care for them, it can even be a dependent deduction. That could be really worthwhile.
Yes.
How about nursing home costs? Is that a deductible in its entirety, or only part, or how does that work?
If the person is in the home due to full medical care, for the main purpose is medical care, then you can deduct everything, food, living, whatever cost that is incurred while you're there. If the main purpose is not for medical reasons, then you can only deduct the portion that goes towards medical care.
Now, would that be true too for like an assisted living facility?
Yes, same thing.
Okay, so even though it's not quite as much care as in the nursing home.
If the purpose is for medical, like they can't really take care of themselves on their own and they have to be there for medical reasons, it's all deductible.
Okay, that's really good to know. In order to take advantage of all these deductions we've been talking about, medical or dependent or your real estate taxes or all those kinds of things that people already know about, you have to itemize those. Correct. Is that correct?
Yes. So you have to be able to itemize in the first place, and then if the medical goes over that percentage, it gets added in. However, even if you can't itemize on the federal return, a lot of times if the expenses still go over the 7.5% or the 10%, you may still be able to deduct them on the Ohio return.
Oh, okay. So you got to pay attention to the kind of return it is as well.
Yes.
These are great tips for our viewers. So with tax season coming, we need all the help we can get with saving money.
We do.
So there are many deductions that you could miss, and that does mean missing out on money. My thanks to Jessica for pointing out these particular examples. If you need help determining if these deductions or any others apply to you, give Jessica a call. Her number's next. Thanks.
For more information, call NMS Incorporated at 1-888-942-8111 or visit www.neececpa.com.